Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for a wild trading day today, February 10th, 2022. We're getting on to 7:30 p.m. We were looking for a hot CPI number. The estimates were between 7 and 7.6%. There's no surprise there. You came in at 7.5, and the market decided that's a red-hot number. The interesting thing was when the stock market dropped 300, 400 points in the Dow, and it did off that number, it made it all up and it went higher. And the market was doing really well until St. Louis Fed Governor Bullard, James Bullard, came out and he said, that's it. If he could have his way, we'd have a meeting right now at the Fed. We do an instant interest rate hike. He wants to see a full percentage point hike by July into these Fed funds. Okay, I get it. So that set the market off and spooked the market. I mean, he was very vocal. Others are joining in the parade. Well, here's my problem with it, and you take it from there. And I write about it tonight in detail in my full research report, which my subscribers get. You can raise rates 2 percentage points. I don't care what you do. You're not going to change the port congestion. You're not going to change the Canadian border situation. That's a Canadian issue, and they're not letting the parts in, so you're closing down Detroit. You're not going to, with higher interest rates, create more jobs. So just what do you do? And I understand that people are worried because this is a major, major hit on it. It's a 40-year high. So initially, all the arguments are going to be, let's do a half-point hike, and we're going to be bombarded with this for the next month, 3 weeks. When we get the next report of this, before the next FOMC meeting, if it comes out at this number or higher, I think it's pretty hard to ignore the fact that you'll probably get that half-point hike. If it abates and goes down even to 7%, it gives Mr. Powell, our Fed chair, the ability to say, hold on, I understand, remember, everything falls in his lap. Why don't we go the quarter point and see what's going to happen if we have to pick it up at the next meeting we have? That's the argument I think we're going to have for 3 weeks. I get it. And what else is happening? All of the Fed's work is being done by the market. Have you watched the 2-year note? It is within a half point of now the 10-year. It's completely, the whole curve yield's done this. The back end's really not going anywhere. You hit 2%. Yes, it's up a quarter point, but you've done a lot more than that in the 2-year. That's the point. And in the world, that's what's going on at other central banks. You're not hearing big negative rates now. Now it's a question of how much positive are they going. So the whole world is feeling this, and the question is inflation out of control for reasons that even raising interest rates won't change? You can raise them to you're blue in the face. If our government can't fix this port issue, you can send all the products or don't send them. They're not moving anyways. And you're not going to hire more people unless those people want to go to work. And if you raise the rate so much, you're going to hit this economy hard between the inflation, hit of labor costs and commodity costs, and then the higher rate. I've said what I have to. When I look at the S&P 500 index, higher high, lower low, seems to be coming back and wanting to get to that 18-day average of closes. Now, it'll be a failure if you start getting underneath these lows right there. That's the fear. I put up yesterday, and I'm going to leave it because I'm proud of what I brought up for you before it occurred. I tried to bring up and say to you right here, I said, folks, and this is when I brought it up, I said, we're at the point where you've got that 62%. If you look here, it tells you the ratios on the Fibonacci retracement. That's about all that it has to go. Okay, this is today, and you're getting a little bit more tonight. So, I'm not the only one recognizing it. That's the important thing. The pattern on the chart is still bullish. Yes, bullish, until you take out 44.56 and a quarter, which puts it neutral. Where's the market caught? Just where I've been saying each night, without Fibonacci. I told you that the market's caught between the 100-day and the 18, and it's searching, and even if it gets through here, the 200. That's what you're in. That is the story that the market's doing, and it's trying to take what I said here in that minute monologue, as I'll call it. It's trying to figure out what to do with that. I'm pretty sure I've got it on the head there. Not my first rodeo with this. And it's a different type of inflation. When you look at the S&P 500 index, higher lows, higher highs. By the way, in my report tonight, I also wrote what's going on in foreclosures right now in the United States. Realty Track did a study, and they are on the rise. And you put inflation, you put rising rates in that, you got a problem for the households that are just barely hanging on. So the numbers are going up, and you're going to see foreclosure rates. They're doing it already. They're up like 29% from a year ago month, okay? Yeah, I know it was the center of everything, but you got to remember they weren't also foreclosing in the heart of everything. That's picking up on how many people are just sitting at that cusp. Remember, there's a willing buyer still. These are not super high interest rates. So you're going to see some interesting things. In any case, that's where you're caught. The trend is still up. And in terms of the momentum in the market, you're turning it down. You're overbought. Overbought condition, big battle, bias up, trend up, battleground. If you take out these averages right here, the question is, do you go down and challenge this low again? That is the question that we're all going to be asking. In the NASDAQ, it's identical. The difference is which averages. Here it's the 200 and the 18, trend up. Momentum never did get overbought. I think you got the buyer stepping in right now saying, if I'm going to be wrong, get me under 14,467.50. And if you take that out, then you break the uptrend, you're opening the door for the 14,000 level. When we take a look at the Dow, again, it did get over the 100-day, so that opened the door for the upper Bollinger Band, and it did miss it. Not by very much, I think you'd agree with me. It missed it by, what did it get, 35,750, and it was 35,821, so 75 points it missed it by, but that's missing it. So it didn't get there. The support now should be the combination right here of the 18-day and the 200, and again, you're overbought. So unlike the NASDAQ, I'm not convinced the pros will step in on this one because you're overbought. A lot of the systems I've looked at, they build in, a lot of them are algorithm systems, and they try to build in everything you can think of, and some of them say, hey, we're overbought, we don't do certain things. Where did you go to in the Russell? Because I'm applauding myself. When we were talking together here, I said, I think it's going to be the first time you get to the upper Bollinger Band. Go look at the tapes that I have out yesterday, the day before. Ta-da! So that was the one I'm looking for. Now, I look for better support to show up right here, 2014. You're still overbought. I'm not convinced that the traders will step in just yet. I want to see a little more action. What is going on is suddenly the Bollinger Bands are wrapping their arms around that. What did the VIX do? We've been talking, especially if you have my morning subscriber video, which today I couldn't talk about it. For whatever reason, the vendor lost in some manner, wasn't broadcasting my VIX information. But this is how we looked yesterday. If you're going to go down, you're going to surprise me by going back into those old lows. And remember, when you were at those old lows, where was the stock market? It was a heck of a lot higher. All right, to get down there, you started the year off on a pretty positive note in the stock market. So that means it should have gone there. Well, instead, the market's reversing course on you. One day doesn't prove a trend, and I'll give you another one that could really be where I get friendly, the stock market. Friendly, you heard me say that. Look at, are we going to embed? So today, both numbers are under 20. Yesterday, they were under 20, not the day before. Tomorrow's a crucial day. If this market embeds until it loses it, it tells me what? It tells me that you have to get bearish this. And if I get bearish, that means I'm bullish the stock market. Just telling you what it is. I don't think it should happen, the embedding. We'll see. The 30-year bonds, I had a question today about Gorilla Glue, and I love the product, but in trading, and it's when the market marries itself to this. Often, you don't embed when you get that. By the time it does embed, it's too late in the parade, and we're getting that type of action. So this market's just coming down to levels where it's not letting anybody get short at a reasonable level there. It's broken out of the sideways action. I think you clearly see this, how much sideways you were there, and then it latched on. This is not typical. But when it does it, I came up with the term Gorilla Glue because it doesn't get away from that number. It goes either side so you don't get excessive under it or over it. That's where you're at. Same identical thing happening here in the 10-year. By getting this pop back over it, you relieve the pressure of excessive days. Now, are we going to embed? You have day one, which you can't count today, right? Day one was yesterday. Day two, the day before. Today could be the third day, Friday. So if you embed, you know what I'm going to do. Get my hands ready, get my keyboard out, take my spray, dust it. I'm getting ready to sell. In the dollar index, you're fighting a battle between the 100-day and the 18-day, and you'll have a battle similar in the euro where you're fighting between, in this case, the 100-day and the lower 18-day average. Those are the battlegrounds that have shaped up. Overbought here, oversold in the dollar index. Which one's going to win out? Well, weighting of 40% tells you they go pretty similar in the sense that the weighting is such if the dollar's up, the euro's typically down. British pound. Today, I don't mind telling you, I had my clients long in the pound. And I've been looking for an excuse to come out of the market here because I thought that I had a lot of work in this trade, that it should have popped even higher. And it missed getting up to that upper Bollinger Band. And during the day, nicely during the day, I was able to do some good things for the clients. Doesn't always work that way, all right? I wish it did. But it's still bullish. But if you take out the lows of today of 135.20, I don't know what you got because that puts you right under the 18-day, but the whole goal is just 9 ticks lower. So I think that if you get there and you don't go anywhere and you don't take this out, I'll be looking at it, and I might be looking at the long side of the market again. In Bitcoin, 2 tests of the upper Bollinger Band backing away in an overbought condition. Now, watch it else. This is the March contract now. I'm going to be moving out of the Febs in the metal video. In Brent versus WTI crude, well, it's interesting what we're doing because we're breaking down a bit right now. This was the close, and this is where you're at right at this minute. Now, if we take a look at the market, you're down another 51 points in the Brent. You've lost your embedded reading. I could be wrong, but normally when that occurs, and you can't get it back now, you've had too many days where it's lost, you normally make a run for the 18-day average of closes. In the WTI, you're down another 36 points in this market, I guess, looking at it. I'm looking for it to get back down here as well. So we'll see if the market's capable of that. Heating oil, you lost your embedded reading. I'm looking for the 18-day average of closes. And in natural gas, I don't see where it has to go a lot lower than this. This is a zone, the 100-day average, where the market seems to be finding something of a home. It was resistance above it. Then when it got above it, it tested it once, and then it decided to move. This is your retest. That's how I'm reading what that part of the market is doing. So it's interesting. Now let me show you something brand new. You haven't seen this. This is our brand new QT product. Now I know a lot of you trade stocks, ETFs. It does it as well. I know that a lot of you want to know when I put out my videos. This is where you can watch them right on the fly. So when I put out a text or an email, bang, you'll get, most of you that are paid subscribers get a text from me in America. We're trying to work this out now foreign as well as our subscriptions are going. We're trying to figure that out for people. There are services and we're working on it. Charts, my full research is in it. But now you're in the car and you want to hear your quotes. You can't look at the road. It's there. By the way, this is how our Government reports look. This is how our reports come in with graphs and everything as well. Audio reports. Remember I told you, David Hightower, Gordy Linn. If you're a grain trader, you'll fall in love with what we have here. But you're driving and you go, hey, I'd like to hear my quote file. It plays them right in order just as they're coming in. How do you like that? It's free. You heard me. I'll compare it to anything out there. I think it's better. I think they did a phenomenal job on this. Go to www.iraepstein.com. Go up and get it sign up for it at our website on free offers. Take a look at it. My clients, you're going to like, I think, what you see here. And I throw it into everything that we have for our clientele. I'm Ira. You have a great day. I'll talk to you later.